Glove giant Hartalega Holdings will be investing 7 billion ringgit to build 16 new glove factories in Malaysia's northern region over the next 20 years. As part of the expansion, its subsidiary inked a sale and purchase agreement with Northern Gateway Free Zone, a unit of MOF Inc.-owned Northern Gateway, for 101.17 hectares of freehold land in the Kota Perdana Special Border Economic Zone in Bukit Kayu Hitam. The purchase price of the land is 228.7 million ringgit. Both parties have signed an option agreement for Hartalega to buy another 52.61 hectares of land in the same location. The acquisition should be completed by March 2022 and is not expected to yield any impact on its share capital, substantial shareholders' holdings, net assets, earnings per share or gearing for FY21. Hartalega said the deal will be funded through internally generated funds and/or existing credit facilities. The first plant is set to be ready in 2024. Hartalega produces 43 billion pieces of gloves per year. Its expansion plans, including the complex in Sepang and now the facilities in Kedah, will see its total capacity rising to 143 billion pieces per annum. According to its CEO, Kwan Moon Leong, the group expects to contribute more than 5% of Kedah's total GDP once the project is fully completed. Malaysia's 2020 tourist receipts plunged 85.3% amid falling tourist arrivals as borders remained shut. Tourism Malaysia said in a statement, tourist receipts fell to 12.69 billion ringgit from 86.14 billion ringgit a year earlier, with the average per capita expenditure at 2,928 ringgit, a decline of 11.3% from 3,300 ringgit in 2019. Meanwhile, foreign tourist arrivals slumped 83.4% to 4.33 million individuals from 26.1 million previously. ASEAN countries, or the short-haul market, made up 68.1% of the numbers, or 2.95 million, followed by the medium-haul market, which includes East Asia and South Asia, with a 20.1% share, or 870,314. The long-haul market share was at 11.8%, with 512,484 tourists from West Asia, the Middle East, America, Oceania, Europe, and Africa. Negative growth was seen for tourists from all three markets. According to Tourism Malaysia, the top 10 international tourist arrivals were from Singapore, Indonesia, China, Thailand, India, Brunei, South Korea, Japan, Australia, and Vietnam. In terms of overall tourist expenditure, the top 5 contributors were Singapore, Indonesia, China, India, and Thailand. The state agency said Malaysia was not alone in registering negative growth in tourist arrival numbers. Citing World Tourism Organization data, it's that Asia and the Pacific recorded an 84% decrease in arrivals last year. Meanwhile, data from the Pacific Asia Travel Association and National Tourism Organization shows neighboring nations including Thailand, Singapore, Vietnam, and Indonesia also experienced a significant decline in tourists. Petronas inked MOUs with 2 UAE-based energy players to pursue collaborations across the energy value chain. The national oil giant signed the agreements with Abu Dhabi National Oil Company, or ADNOC, and Mazda, sealing partnerships that mark a significant milestone in Malaysia-UAE bilateral relations. According to Petronas President and Group CEO Tengku Muhammad Taufik Tengku Aziz, the MOU with ADNOC spans the entire oil and gas value chain, with both parties potentially collaborating in the exploration, development and production of Abu Dhabi's significant conventional and unconventional resources. The two parties will also explore cooperation in the downstream and trading sectors, as well as clean technology. Meanwhile, the MOU with Mazda, which is owned by Mubadala Investment Company, will see both companies pursue clean energy projects across Asia and the Middle East, covering renewable energy and green hydrogen. The two companies will explore joint participation in large-scale solar and wind opportunities for utilities, commercial and industrial customers, focusing primarily in Asia. They will also look at joint production of green hydrogen. Bursa Market Securities has advised investors to exercise caution in the trading of Dataprep Holdings shares. The counter has skyrocketed to RM3.15 at today's close from barely 18 cents in early January this year. The exchange had issued an unusual market activity query to Dataprep on March 1st, and the group responded by saying it was not aware of the reason behind the counter's rally. In a statement today, Bursa cautioned investors and advised them to make informed decisions in the trading of the IT solutions provider's shares. The exchange added that it will not hesitate to take appropriate regulatory action to ensure fair and orderly trading of Dataprep's shares. On February 15th, Dataprep announced it has completed the acquisition of a 51% stake in multimedia hardware and component distributor Rida Associates for RM3 million. The following day, the group proposed a private placement of 138.6 million new shares to independent third-party investors at an issue price to be determined later. Its shares have been on a steep upward trend since mid-February, when it stood at 26 cents. The stock climbed further today, rising 50 cents or 18.87% to RM3.15 for a market value of RM1.9 billion. Since the beginning of the year, the stock has risen by 1,650%. The Ministry of Human Resources is studying the need to raise SOCSO contributions without burdening the people. According to Bernama, Human Resources Minister Datuk Sri M. Sarawanan said the contribution rate had never been increased since 1971, the year the agency was established. He was quoted as saying that his ministry found demand for contributions had increased from all job sectors, including from the informal sector, due to awareness of the benefits and need for a safety net. Sarawanan is reportedly mulling a slight increase, about RM1 or RM2, to further widen the safety protection. According to the minister, more than 2.72 million contributors have benefited from SOCSO payouts.